Many investors are unsure whether cryptocurrencies are a wise investment given the billions of dollars invested, the excitement surrounding them, and the daily launch of new cryptocurrency enterprises. Is it still a smart idea to invest in cryptocurrencies despite the fact that the most, if not all, cryptocurrency investors lost money on frauds like the Squid Game token, Terra USD stablecoin, and other altcoins? Would a cautious investor still consider investing in the sector given the extreme volatility shown thus far in the tales of Bitcoin millionaires making or losing millions overnight? Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. What to consider first? Think about asset allocation before making any financial decisions. To divide your investments among a variety of goods in order to generate diverse returns over the long term is known as asset allocation. Similar to this, you should consider your risk tolerance, financial goals, and timescale when selecting how much of your investment portfolio to dedicate to cryptocurrencies. Any cryptocurrency or other digital asset should be thoroughly researched before being bought. It's not a good idea to buy digital assets just because a friend gave you a recommendation or because you're afraid of missing out, FOMO. It is advisable to read the white paper before investing in any crypto assets in order to gain a better understanding of the goal, design, and potential uses of the coin. Knowing the team could help you get a sense of the history of the leadership. The risk of trading a crypto asset that crashes due to fraud should eventually be avoided due to the lack of regulation and monitoring in the field of digital assets. Following your discovery of a Bitcoin asset in which you feel secure investing, you must choose how to proceed. Do you buy cryptocurrencies outright? If so, will you manage your investment directly, through a broker, or through an exchange account? If so, have you made a digital wallet? Or do you want to use a hedge fund, mutual fund, or exchange-traded fund as your asset manager? Do you decide to purchase shares of Bitcoin exchanges using a proxy? Or invest in shares of other publicly traded businesses that employ blockchain technology or provide services to the industry, including GPU producers? The wise investor would consider all of the possibilities because each of these investments has advantages and disadvantages. Is cryptocurrency a good investment for you? The most important distinction between investments and trading is the time horizon, therefore we must start there. Any asset trading is often more speculative and has a shorter time horizon. To profit from intraday price swings, dealers typically execute dozens of trades each day. Trading versus investing. Trading requires a disciplined approach since seasoned traders manage their exposures well. However, investing is a methodical approach that realizes predetermined financial objectives over a longer time frame, typically 5 years or more. A plan could be made by investors to save money for retirement, a down payment on a property, or a child's education. The next stage is to assess your level of risk tolerance. Cryptocurrencies are only a wise investment if you can withstand a certain level of risk due to their volatility. Higher volatility investments might not be the ideal choice for you if even little price movements give you insomnia. They are risky investments since the price volatility of cryptocurrencies is comparable to that of other asset types like growth stocks or high-yield bonds. To withstand potentially disastrous price swings, you must be ready. Liquidity constraints. The liquidity restrictions that various crypto assets have should also be taken into account. Liquidity, in its simplest form, relates to how easy or difficult it is to purchase or sell a specific thing at any time without materially changing the price. If you want to purchase a rare car, for example, there are lots of them out there, and if you can find one, you will just need to pay the asking price. The market is particularly unliquid because if you buy it, the seller would undoubtedly demand a higher price from the buyer who comes after you. However, because there is a lot of liquidity, the amount you pay will depend on the market if you want to purchase something more general like some Japanese yen in exchange for your US dollars. Due to the high liquidity among JPY sellers who will accept UD as payment, the next buyer of the yen will probably buy it at a price that is similar to or close to the one you transacted. Because some cryptocurrencies are more liquid than others, investing in cryptocurrencies needs you to be ready to deal with illiquidity both during the purchasing process and maybe during the selling process. In the worst-case situation, you won't be able to sell your investment when you need to since there won't be enough market activity in that particular cryptocurrency. Average returns for cryptocurrencies. A cryptocurrency's continued operation in the future is not guaranteed. For instance, only 7 of the top 10 cryptocurrencies by market value in 2013 are still operational today. The top 10 cryptocurrency coins of 2013 comprised Bitcoin, Litecoin, Peercoin, Namecoin, Feathercoin, Terracoin, Devcoin, Frycoin, Novacoin, and CHN Coin, according to industry data provider CoinMarketCap.com. In 2013, the market value of all bitcoins was approximately $1.2 billion, with one bitcoin being worth about $112. One bitcoin will be worth about $30,000 and have a market value of $1.3 trillion on May 16, 2022. One Litecoin was worth $3.38 8 years ago. It wanted a price of $245 for each coin in April 2021. Right now, it is worth $67. 2 of the 10, Frycoin and Terracoin, have actually witnessed price declines since then. Terracoin is currently only worth a small portion of what it did in 2013. Devcoin, Novacoin, and CHN Coin are no longer listed on CoinMarketCap. Therefore, it is unlikely that investing in little coins over the long term will result in significant financial gains. New cryptocurrencies are continuously flooding the markets for existing ones. A contemporary example is Dogecoin, which gained popularity in May 2021 but has had difficulty maintaining significant investor interest. Is cryptocurrency a good long-term investment? Yes. Wealthy investors like banks, hedge funds, and pension funds believe this to be true. The investment banking behemoth JP Morgan Chase urged clients to think about diversifying their assets by contemplating investing 1% of their portfolio in Bitcoin in February 2021. More people than ever before are making investments in cryptocurrency. The average investor who buys stocks and shares for a few £1,000s is not the target audience for this investing advice. Rather, it is financial specialists. Investing in cryptocurrencies that are unsupported or disliked carries a significant amount of risk. It seems like a small group of tenacious early investors have amassed wealth. Who has not yet arrived? It should be very evident by this point that their value has all but vanished. The majority of experienced Bitcoin investors won't even think about supporting ventures that are currently relatively unheard of. Benefits of investing in cryptocurrency. We've so far covered some of the key factors that investors need to be wary of, but there are also strong arguments in favor of investing in cryptocurrencies. New asset class. Cryptocurrencies are growing and developing, as we've seen with Bitcoin and Ethereum, and a new asset class is also developing for these kinds of assets. Some well-known professional fund managers have established dedicated investment funds that only invest in Bitcoin and other cryptocurrencies, such Cathie Wood from ARK Investment Management. Diversification. By owning a variety of investments that respond differently under the same economic conditions, the aforementioned institutional investors aim to diversify their risks. Some contend that the diversification advantages of cryptocurrencies are advantageous, particularly given the inflation that is taking place. New investment vehicles have also been introduced that benefit from the rise of particular cryptocurrencies, such as options and futures on Bitcoin and Ethereum, as well as particular investment vehicles that effectively handle cryptocurrencies for investors. Upside potential. The industry is still in its infancy, so there may be other developments that will make investment in cryptocurrencies more appealing in the future. A stable coin is a type of cryptocurrency that is backed by assets and connected to the value of a fiat currency. Stronger regulations, for instance, to manage initial coin offerings, may be introduced to help protect investors and anyone who are concerned about fraud. Futures on cryptocurrencies have already been mentioned, and if the market changes, futures on additional cryptocurrencies traded on trustworthy exchanges may also exist. Bitcoin bears have the option of shorting the asset through futures, which will increase total liquidity. This is it for today's video. What do you think of our video? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.